Yo, 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 guys. A very, very, very beautiful and blessed New York session on this beautiful Tuesday. Hope everybody is doing fantastic and can hear me loud and clear. Let me know if the audio is doing good. Let me know if the background music is good. And let me just know if you are doing good, guys. What is up? What is up? What is up? Yo, guys. How's everybody doing today on this fabulous Tuesday? Good morning, good afternoon, good evening. Hope everybody is healthy and doing well. I'm going to take off my headphones because I'm not actually... Okay, they didn't go to plan. But I took off my headphones and everything did or should be working now. The echo is gone now as well, guys. So that should be doing good as well. Daylight savings in the United States suck. This is an hour later. I'm the best trader in London. The best trader in London is the best Okay, sad. Hope you're doing good. Sound on the mic is a little bit harsh. Too loud. Wrong mic again. It's not good? VAs? Let me try and fix this, guys. Let me see. One sec. Okay, guys, let me see what I can do about this. Give me 1 second. Just 1 second. Okay, guys, let me know if the audio is a little bit better now. It should be. Let's see. Let's see if the audio is a little bit better, guys. It's now clear? Okay, fantastic. Okay, fantastic, guys. I'm glad to hear that it's clear now. I still think it's a little bit bad from what I'm hearing on my phone as well. I'm trying to listen in on my phone. Let's see if the audio is a little bit better, guys. Okay, it's a little bit better. I have to find out or figure out what that's going on. But I hope everybody's doing good, and let's see what we can discover again today, guys, because as I mentioned on and it should be on Discord, I've prepared a little presentation for you guys. So today we're going to be diving into the fundamentals of the market, seeing how everything gets moved by inflation and what the relationship is between inflation and the markets in general. So I prepared a little presentation for you guys. It's going to take around, I think, 15 minutes, maybe a little bit shorter, but that should definitely help for everybody's perspective on the markets and with everybody's fundamental understanding of the market. So without further ado, let me know what you guys prefer. Would you like to go into a quick market update on these major dollar pairs, or would you prefer for us to just simply dive into those fundamentals and dive into the fundamentals of the market and that presentation that I prepared for you guys? Let me know in the chat, guys. What would you prefer? Fantastic. Glad to hear that the sound is doing good. Brian tuning in all the way from New Jersey. Thanks for tuning in. It's all about yada now. Man, the mic is horrible. I feel like I have water in my ears. Fundamental. Okay, guys, let me see if I can fix this microphone thing. Let's see. Okay, fantastic. Brian tuning in all the way from New Jersey. I can hear the mic is very bad. Okay, let's see if this improves anything at all, guys. Let's see if this improves. I can hear the mic is very bad. Fundamentals. Okay, guys, we're going to dive into those fundamentals. And in the meantime, just let me know in the chat one more time if the audio is good now, and then we're going to dive in. Let's see if this improves anything at all, guys. Let's see if this improves. Yeah, sound is better. Okay, I took out the plug, and everything should be working good. Fantastic, guys. So thank you very much, everybody, for taking the time to tune in to today's live stream. Appreciate everybody taking the time to show up. We're going to dive into the fundamentals real quick. This is going to help you have an understanding of the markets, so that you understand how to trade in combination with understanding inflation. So as everybody knows, inflation is a very big part of the fundamental analysis that we all do. And it's something that I've been taking more and more into consideration when trading myself. So I'm just super curious to hear from you guys what you think of this presentation. If you have any questions at any time, I'm just going to ask for I'm going to ask you guys if you have any questions, and then you will have the opportunity on every single slide to ask a question or two, and then we're just going to answer one or two. And if there's no questions, also let me know, because then we're just going to continue and keep it going. So as you can see, fundamentals that move the market, and today we're going to be talking about inflation. If you guys appreciate it, then we're going to talk more about these kind of topics, and how I use them on a daily basis, and how you can read the market yourself as well. So we're going to talk about inflation today. So first of all, guys, what is inflation? So let me just make my camera a little bit smaller, because I can see now. I didn't actually think about that, where I was going to put my camera. I'm going to put my camera nice and small in the right bottom corner, because I know that I have a spare space over there. So what I want you guys, the microphone is still distorted. Let me see, maybe this works better now. I put the thing a little bit lower for the mic. I'm going to put my camera nice and small in the right bottom corner, because this should be better now, guys. This should be better. If this is better, then we're going to dive in. Okay, guys, let me know now in the comment section if this works a little bit better, because now the audio as well inside OBS looks a lot better. So everything should actually be good now. Yes. Okay, fantastic, guys. So if at any time there's an issue, just let me know. Okay. Good, guys. So we're going to talk about inflation today. So first of all, what is inflation? I know most of you probably know what inflation is. We're going to keep it nice and simple in the beginning, and then we're going to dive a little bit more into the more complicated things at a later stage. So there's a few things that you need to understand about fundamentals, guys, and that's a few things. Okay, so first of all, interest rates. This is the most important thing, part of fundamentals, and we're going to dive into this when I'm back on the charts, because then I can also attach some drawings as well. But what I want you guys to do is I want you to write down what I'm explaining now, because the next sessions are also going to be about the fundamentals, and we're going to dive into a little bit more depth in the next sessions as well. So we're going to do and try this to do this every single Tuesday. So first of all, at the top of the food chain of fundamentals, you have interest rates. Okay, so this is the number one thing that you need to understand. Interest rates is pretty much what drives the market from point A to point B. Then underneath interest rates, you have a few things such as inflation, such as surveys, and much more, again, which we're going to dive into the coming weeks. And the first topic that we're going to be discussing today is inflation. So first of all, what is inflation? So inflation refers to the rise in the general price level of goods and services in an economy over time. So it means, very simply said, that the purchasing power of currency decreases as the price rises. So very simply said, if at first you got a burger with, let's say, 3 burgers on it for $5, at this point in time, nowadays, you're only going to have 1 burger for the same exact price. Okay, so I think everybody understands and has kind of pretty much experienced this in some way or form, the same amount of food or the same amount of, let's say, something that you receive costs more money in today's economy. So there's 4 different ways, guys, 4 different ways that we measure inflation. We have, first of all, CPI, which is the consumer price index. Here we measure inflation based on the consumer side. Then we have core CPI, which is the exact same thing as CPI, but then it excludes food and energy. Then we have PPI, which is the producer price index. So this is on the producer side of things. And then we have retail sales, which measures pretty much as it mentions the retail sales. Okay, so these are the very important things that you need to understand, and yeah, it's going to become more clear later on. Okay, so this is just very simple. Now what I want you to understand is how inflation can impact the currency markets that we trade on a daily basis. Okay, so first of all, what I need to understand again is that inflation is when prices for example, food, gas, housing go up over time, and when inflation rises, your money does not buy as much as it used to. So now the relationship between central banks and those interest rates, because remember what I mentioned at the beginning, interest rates are the number one driver of, let's say, the financial markets. We need to understand at every single point in time what interest rates are doing, because interest rates will be adjusted based on, for example, inflation. So inflation is kind of like the cause which will make interest rates, for example, change, which will then make the entire market change. Okay? And obviously it's not just inflation. There's many more things that you need to understand, but inflation will makes up of a very big part of the decision making on those interest rates, which will then eventually move the market from point A to B. Okay, so first of all, what I want you to understand is, what do central banks do? Okay, so central banks like the United States Federal Reserve, the Fed, control interest rates in the economy. So as you can see, these two people are not my grandparents, but this is Lagarde. She's the head of the ECB, of the European Central Bank, and this is of course Jerome Powell, who is the head of the Federal Reserve in the United States. These two people are pretty much the two most important people in the Forex market, as they move the market from point A to point B with their interest rate decisions. Obviously, they're not alone in making those decisions, but they are the people who kind of like announce it to the general public. So now, how interest rates affect a currency. So when inflation rises, guys, when inflation rises and things become more expensive, you can buy less with the same amount of money, central banks raise their interest rates to make borrowing more expensive, because this will help slow down inflation. So why raise interest rates? Because higher interest rates make a more attractive currency. And when interest rates go up, investors want to put their money in that country to earn more interest. And this increases the demand for that currency, causing it to rise in value. For example, US inflation increases, the Federal Reserve raises interest rates, and as a result, the US dollar becomes more attractive to investors because they get better returns on their investments. So the US dollar strengthens. So that's why the general concept is pretty much, okay, high interest rates are good for a currency, because that means, or high inflation is good for a currency, because that means that it's very likely that the interest rates are also going to rise, which will make the currency more attractive, which will in turn cause banks, countries, and whatever to put more money into that economy or into that currency, which will then again make the currency rise. So that's why often if you look at Forex Factory, for example, and you see the interest rate decision, so for example, or inflation, announcement, and for example, this Friday we have PCE coming out, so the producer, the rise in the producer prices. What you're then going to see is that if the number comes out higher than expected, this is good for a currency. If the number comes out lower than expected, this will be bad for a currency. Okay. So this, now let's move on to the next slide, because an example, because I understand it might still seem very far away. So here, the United States dollar impact on inflation. So a little bit of context. If inflation in the United States rises, let's say due to an increase in energy or food prices, the Federal Reserve may raise interest rates to counter inflation. Because again, if things become more expensive, what does the Fed do? They raise interest rates. Why do they raise interest rates? Because it becomes more expensive for you as an individual or for whatever to borrow money. Therefore, people tend to save money, spend less, and this then reduces inflation, because inflation mainly goes up because people keep on spending more and more money. Now, I'm going to give you an example, because when the Federal Reserve raised interest rates multiple times in 2022 to combat high inflation. So remember, 2022 is pretty much like after COVID. You can see like after COVID-19 back in like 2020, 2021, the inflation rates started to rise higher and higher, all the way up to even like 8% and higher than that. That is when the Federal Reserve started to raise interest rates as well. So what happened? The US dollar strengthened and the Euro USD dropped from above 1.20 to around 1.05 in late 2022 and early 2023. Okay, so the Euro USD movement, inflation rises in the United States. This means higher USD interest rates, which means a stronger US dollar, which means a lower Euro USD. So inflation peaked at 9.1% back in June 2022. What does the Fed do? They raise interest rates. Why? Because borrowing becomes more expensive and it starts to cool down the economy. Remember guys, if the inflation rate starts rising and you want to slow down the economy, what do? You, for example, push down the Fed interest rates. And then what happens when you push that down, or let's say push that up, people start borrowing less. So for example, people who wanted to buy a house, if interest rates are very high, they're not going to get a mortgage and they're not going to spend money on, let's say, all the building materials, all the workers that are needed in order to buy a house, right? So let's move on to the next one. So interest rates are being raised throughout 2022 after COVID, as you can see, and this is then in combination, again, with those rising inflation, okay? And then remember, if inflation rises, it's very likely that interest rates are going to rise as well, which then again is going to cause what? Euro USD to drop. Remember, as we can see here. Now, in 2022, the European Central Bank had been slow to react to the rising inflation compared to the United States. So the Fed started raising those rates 3 months already before the European Central Bank. So you can see the European Central Bank was later with raising those interest rates than the United States. And that was the result, or as a result of that, the Euro USD fell below parity 1.0, showing how inflation and central bank policy decisions, or the lack of, can move the markets overall, okay? So this is extremely important to understand, because Euro USD is obviously here in a downtrend in towards the downside, in towards like 2022 and towards 2023. But the real reason is not because of obviously like a support and resistance level, but it's because of these decisions and because of these outcomes of inflation numbers and because of the interest rates that the market eventually moves from point A to point B, okay? So it's very important to understand this and yeah, take that into consideration. Again, PPI is a leading indicator of CPI. So for example, a rise in PPI, so again, remember guys, PPI stands for Producer Price Index. A rise in PPI indicates increase in production costs, which can eventually lead to a higher consumer prices. Why? Because guys, if it costs more, for example, for let's say whatever the producer to make a plane, what's going to happen? Plane tickets are going to become more expensive as well. So if PPI goes up, it's very likely that CPI is going to go up as well. Because if producers face rising raw material costs due to inflation, these higher costs are then going to be passed on to the consumers, influencing the CPI. And the same is happening now, obviously, with or in the United States, when Trump, for example, imposes tariffs and makes cars more expensive that are produced in Mexico. I shared an article on this inside Discord as well. Then what happens? The cost of the cars become $3,000 more expensive, and then who has to pay for those costs? That's going to be the consumer. So if car production itself becomes more expensive, PPI tends to rise, but then eventually that will be passed on to the consumer, which will make CPI rise as well. That's why PPI is always a little bit more important, in my opinion, than CPI. Because PPI is kind of like the leading indicator, and you can also see that here on the chart, for example, in a second as well, where you see that PPI moves prematurely, moves earlier, moves faster than CPI itself. So in the US, if PPI increases significantly, the market anticipates that the Fed may take action, and this results in a stronger US dollar, again pushing Euro USD down lower, because again, rising PPI in the United States signals future CPI increase, and then the Fed may hike rates, which means put the interest rates up, which will make again the US dollar to strengthen, and then again Euro USD to fall. And then again, here's a good example of that happening, but I think this is the same example as I shared before, or no it's not. But this is the example that I already talked about, that Euro USD fell below parity, because as you can see here, inflation, what happens to it? It starts to rise throughout 2022. And then as we can see here, the Fed, because here again, guys, the numbers on inflation were here. So inflation starts to rise into 2022, right? You can see this is United States inflation. And then what happens as it starts to rise into 2022, interest rates start to rise in the United States. You can see the Federal Reserve. So the Federal Reserve in the United States is faster with those rate hikes before the ECB, okay? So the America is moving faster than Europe is, and as a result, because America is faster, you can see that Euro USD starts to drop in towards the downside. So again, interest rates are like the most important thing that you need to understand, but interest rate decisions are based on or are made based on those inflation numbers that come out. So you need to look at, okay, what is PPI doing, and then how is CPI moving in tandem with the PPI? And then if inflation starts rising, then you need to understand, okay, because inflation is rising, interest rates might start to rise. If those interest rates then start to rise, then what happens? The dollar will become stronger, which will then in turn cause your USD to start dropping down lower. Then again, this is what we discussed as well. PPI is kind of a leading indicator for CPI. And then what I want you guys to understand is core CPI versus headline CPI. So again, this is just normal CPI versus core CPI. So core CPI, again, excludes volatile items as it's more accurate measure of long-term inflation trends. So for example, if the core CPI remains high, even when the normal CPI might be lower due to volatile food and energy prices, the Federal Reserve may still increase rates to keep inflation under control. For example, again, in 2022, despite the high volatility in energy prices, which were the result of the war between Ukraine and Russia, the United States Fed focused on core CPI to guide its rate hikes. So these are things, again, that you can understand from reading about the markets and understanding, because again, we all go into Forex Factory and then we all check out, okay, what is, we all go to Forex Factory and we check, okay, CPI is coming out or core CPI is coming out, but by reading actual reports on, for example, what Powell is saying, or by reading Bloomberg, you'll then understand, okay, I need to shift my focus instead of looking at the headline CPI to focusing purely on the core CPI, because the actual effect of that headline CPI is not even actually going to really be like taken into consideration. The strong core inflation led to aggressive tightening and strengthening the US dollar, and again pushing the Euro USD down lower. So again, how does this result in a movement on Euro USD? If we have a rising core CPI, so if we have a rising inflation, the expectation is that there will be a tighter Fed policy, which will result in a stronger US dollar and cause Euro USD to decline. Again, why inflation rose was because of these two things. Oil and gas became more expensive. This could be a cause of rising inflation. And for example, post-COVID, there was a demand shock and a tight labor market, again, causing prices to rise very heavily. Again, if demand is higher than the supply, then what happens? The price will go up, which will cause inflation to go up. Because during COVID, the production of cars stopped, but then suddenly when COVID was over, everybody wanted a new car. Then what happens? Everything becomes more expensive because there's more demand than actual supply itself. Last of all, we obviously have retail sales as well and its effect on inflation. So consumer spending in relation to inflation. For example, when consumers spend more, increasing retail sales, it can drive inflation up, leading to higher prices. This happens during an already high inflation period. The central bank again may raise interest rates to prevent an overheating economy. So for example, in 2021, strong retail sales in the US indicated increased consumer demand despite inflation concerns, leading to tighter monetary policy and a stronger US dollar. Again, this was post-COVID, so everybody started buying stuff again. I think you can relate to this as well. So we see after COVID, after that 2020 kind of like peak, into 2021, suddenly everybody starts going outside again and spending all the money that they saved. In the United States, for example, what happened, everybody was receiving, I think, coupons of like a couple $1,000s or a couple $100 from the United States government just to spend throughout COVID. Then what happens, retail sales go up as soon as people can start spending these coupons. Then what you see happen here on Euro USD, again, rising US retail sales means a stronger US dollar and caused again Euro USD to fall. So you can see exactly this. Retail sales start flying into the absolute moon. Euro USD starts to fall in towards the downside. Okay, so why you need to understand inflation, the market impact. So inflation data directly affects currency movements, because as traders, understanding how inflation indicators like CPI, like PPI, and retail sales influence the central bank policies and the market sentiment is absolutely crucial for everybody to understand. For Euro USD, knowing when inflation is rising in the United States or in the Eurozone can help you predict those potential interest rate hikes, giving you a heads up on which direction the currency pair might move. So again, we use inflation not necessarily to say, okay, Euro USD is going to go up or down. No, we use it to understand what the sentiment is doing and to predict the potential for those interest rate hikes or for interest rates to go down, for example. And this will then help us kind of like predict the long-term trend on, let's say, Euro USD. So always watch CPI, watch core CPI, monitor PPI for early insights, because PPI again is a leading indicator for CPI and core CPI. And just track retail sales as a gauge of consumer demand. And that's pretty much what I wanted to explain to you guys today. that was that. And I hope you guys enjoyed a little breakdown of how to utilize inflation to your advantage when trading. And yeah, I hope you guys learned a little thing or two from that. Obviously, it's the first time giving a presentation like this to you all. So next time I'm going to watch it back and I'm going to understand what I can do better. But I hope you guys appreciate it, and yeah, we're able to kind of like learn a thing or two from this and understand that, again, IR, so the interest rates are kind of like at the core of everything that we want to understand. And then underneath that, we, for example, have inflation, right? For example, we have what? Surveys. We have what? We have, for example, let's say balance sheets, right? All these kind of different things. And then underneath inflation, that's where you have, for example, PPI, right? We have CPI. Underneath surveys, that's where you have consumer sentiment index, for example. And all of those things together, like in tandem, all of those things together, those will lead to those interest rate decisions, which you then in turn need to understand, because that is eventually what's going to be pushing the market up higher or lower, right? So the reason why the dollar, for example, has been weak, obviously there's many reasons for it. But if you look and read a little bit about what's happening in the world, you'll see that Trump has been requesting lower interest rates, right? So those interest rates, what does Trump want? He wants them to lower them. What will happen if interest rates get lowered? Again, the dollar becomes weaker, right? The dollar becomes weaker. The dollar starts pushing down lower together with those lower interest rates. And why does Trump want those interest rates down? Why does he want the dollar to go down? Because a lot of the stock market is dependent on the fact that it sells products in foreign countries. And when the dollar is weak, this is often very good for the earnings of those United States companies. For example, Uber, right? US company. For example, Apple. They sell a lot outside of the US, and if there is a weak dollar, they can make potential money on those currency rate exchanges. So a lot going on that side, guys. But yeah, glad that you learned a thing or two from that. And yeah, in the next one, we're going to be talking a little bit more about yeah, not inflation obviously, but about the surveys or about interest rates themselves. Now let's dive into euro dollar, because I know a lot of you are dying to understand what is going on. So again, euro USD at this point in time is moving pretty choppy, guys. We can all see that at this point in time, euro dollar is pretty much stuck a little bit inside of this range, and the current price action is something that we need to compare to GBP USD, because I want you guys to see this real quick, okay? I think it's understand that you see the difference, or the kind of like the correlation between what is going on GU and what is going on EU, okay? So here on the left, what do we have? We have euro USD, okay? And what we have here on the right is GBP USD. So you can pretty much see that we have very similar price action. I'm going to run you through it real quick. So here we have an overextended push in towards the highs. Here on the left, we had an overextended push in towards the highs. We have the ascending correction. We have the ascending correction. And then what happens is that we have the break of structure down. We have the break of structure down. But is there a lot of momentum? Is there a lot of momentum in towards downside? Not really. Kind of like slow momentum in towards downside. At the time, everybody looking for shorts from this supply zone. What happens? Boom, we fly into towards the sky. Again, everybody here looking for shorts from this supply zone. What happens? Potentially we could fly in towards the sky. So I'm keeping a close eye on the current price action. I know a lot of you are looking for further downside on euro USD, but at the same time, that is what is making myself a bit cautious. I don't want to get caught up on that train for the further downside on euro USD, because at the moment what we have is a 4-hour fractal break. So if we look at the overall order flow here, very mechanically speaking, here we had a low break. What happened here? We had a high break. The actual fractal high is this high over here, by the way. So this now means that here on euro dollar, you have a 4-hour demand zone that is currently in control. Now, preferably, as I mentioned this morning, I was kind of preferring to see these two equal lows get taken out and then a reversal happen. That would have had my preference, but it doesn't necessarily need us to take out those equal lows, right? What could just happen is that maybe, or we don't even need to tap into this refined demand zone, pretty much it would be preferable, but we could just tap and then fly up higher without ever kind of like really pushing down any lower. So that looks more like turtle soup. Turtle soup is the most pathetic name I've ever heard in trading, to be very, very honest. Like, these ICT concepts make me laugh always, guys. Like, there's no need to call it turtle soup. Just what do you want to call it? You just call it a range. It's just consolidating. I don't know what you guys think, but I think if you call a trading concept turtle soup, it just sounds like very pathetic. No hate for the rest, guys. All love. Just sharing my opinion. Looking here at the dollar itself, the dollar is obviously also very heavily consolidating. We can see that we swept the highest highs. Over here, we swept that high, and again, we swept additional high, and that now means that here on the dollar, you pretty much have an area of consolidation, which is your supply zone. So for now, this supply zone is in control, and I'm just looking for further downside. A lot of equal lows have been left open. I think if we can break this low, then all hell will break loose for the dollar. In the meantime, if we do not break that low yet, then it's going to kind of like come down to this supply zone over here. Keep an eye on the lower time frame, see what the 1 hour does inside there. Does it provide you with a change of character, or does it just continue up higher? But overall, for the dollar, I'm still just simply looking for further downside. I think everybody's looking obviously for that pullback. Again, it could happen. I'm just looking at prior price action in the past, where we've also seen kind of like these overextended moves in towards the downside. It doesn't necessarily mean that we're going to see that deep pullback. Right here, for example, a good example where we get a strong push in towards the downside. Everybody's waiting for this area of supply over here, and then what happens, we just get a minor pullback, and then the downside continuation once again. So I'm kind of looking for similar price action here on the dollar. What I need is, though, kind of like for the immediate market structure to break, I want this demand zone to break. And then for me, if that breaks, then this buy before the sell kind of like really becomes like a strong zone. So I'm waiting for this low to, I'm waiting for this low to go, and then I'll have more conviction that we're going to head down lower. Otherwise, yeah, it could still kind of like react to this demand zone. So it's at a very, very important level. Let's keep an eye. Candle close below this, then I'm just going to be shorting it further down. What else, guys? Don't forget to leave a like on the stream. Always highly appreciated. How many likes do we actually have today, guys? 218. Thanks, guys. Appreciate all the love. For the rest, let's have a look. Were there any questions actually about inflation, guys? Anything that is still unclear or still needs answering? Because then I'm still here to help. But yeah, I mean, that's now for your USD. So your USD, I'm not going to obviously take longs from this demand zone. I'm preferably waiting still for the dollar to break below this level over here. Once that breaks, then I'll be happy to look for those shorts. However, for myself, AUD USD and as well NZD USD are my main kind of like trade setups that I'm looking for at the moment. We've seen a nice breakout in towards the highs. I'm now looking for upside continuation. If it retests, beautiful. If it pushes up higher, beautiful. I'm looking for further upside on AUD USD. For myself, yeah. For myself, I'm just looking for further upside on AUD USD. I can overcomplicate it, but there's no real need for that. Overall, we're still inside weekly demand. Weekly fractal structures bullish between the two black lines, and I'm looking at the 4 hour time frame now here, where we had a beautiful fractal breakout actually, with this low, us swiping all of the lows underneath here, seeing a sharp reversal up, some chop, reversal up, and I'm now just looking for retest and still further upside continuation. So AUD USD holds my preference for further longs. NZD USD the same. We've now seen an official 4 hour change of character after this high break, and now this is the sell before the buy up. So I'm looking for further upside continuation from this 4 hour demand zone. Preferably I would swing this up higher and take a position like this with my stop loss ultimately underneath the lows, and targeting around a 1 to 3 risk to reward, which would be in line with the overall weekly structure as well. Because for the weekly, I'm looking for further upside as well still, or on the daily will be a little bit more clear. Yeah, so for the daily, I'm kind of targeting this high over here. For myself, these are just all descending highs, no real clear areas of supply. And for me, the daily trend is clear, looking for upside from this demand zone. And then on the 4 hour, we've now seen that bullish confirmation that I need, which is the 4 hour change of character over here. And now just looking for further upside. Fabio, but why US decisions mostly affect the euro instead of other currencies? Because the dollar is the main reserve currency of the world. Yeah, it's just the main currency that makes the world go around. So for me, the dollar is always the most important. if the PPI is low but core CPI still rises, how do we make of that information? Then you need to understand what Powell says and what he's looking at that specific point in time. Most often it will be explained in his statements why that is the case. So again, I'm not going to say why PPI could be low, but then CPI could still rise. Obviously CPI is lagging, so that could be why. So PPI starts to drop, but then the producer inflation still needs to be passed on to the consumer. So that could be a reason, or how you could interpret it. And then Powell would say, for example, oh, well, this is because of this and this and this. And then you understand, okay, for the next interest rate decision, he's going to be looking at core CPI instead of PPI and the headline CPI, or he's going to be looking at retail sales, for example. Euro to dollar is the highest percentage of others as a composure of the dollar index. That's indeed correct. Okay, sorry guys, I'll remove myself from the microphone. But yeah, that's what I'm pretty much looking for on those dollar pairs. I saw a few questions as well about AUD Swiss. AUD Swiss, I'm looking for further upside as well. It's just so consolidative at the moment. I'm kind of looking for this to happen. At this point in time, what I want to show you guys is this, where we have pretty much a key level of support established here already since the beginning of March. At this point in time, we've been consolidating. This morning we kind of broke out. This is now your immediate demand zone, so I would be looking for further upside on AUD Swiss. Yeah, for sure. So yeah, keep an eye on further upside or further longs on AUD Swiss. Looking at the daily as well, I like what I see on the daily in the sense that here we swept the lows and we're now looking for upside continuation, pretty much in between this daily fractal low and this daily fractal high. So that's what we have our eyes set on, guys. In the meantime, CAD Swiss is similar to AUD Swiss, also looking for a further upside push on CAD Swiss. It's currently retracing in towards the downside, but yeah, looking still for trend continuation in towards the highs. Daily structure for now is or has created some bullish order flow, and looking for this just to continue up higher. And as long as this low is respected, it should still push up higher. A lot of you are also looking at gold and Euro AUD. So Euro AUD is still looking good for further downside. Yeah, still very interested in swinging this down lower back in towards the 0.5 fib of this daily range. So yeah, still very interesting to push down lower. Would definitely look for potential skill in positions on that. And I know a lot of you are also looking at gold. Gold is pushing up higher. It's broken the overall order flow, which is a nice thing because this now means that we have a clear demand zone here on the sell before the buy. So I would definitely advise to look for continuations on gold up higher to take out these equal highs and push back into an all-time high. GBP/USD is one of the more ugly pairs as of now. It's extremely consolidative, even more consolidative than Euro/Dollar in my opinion, and definitely a pair that I would recommend staying out of. It's currently at kind of like a support resistance level over here, but yeah, definitely not interesting at the moment due to its rangy nature. And for the rest, US dollar against the Japanese yen is pushing down lower again. It's back in daily demand. So inside here, you can obviously still look for longs if you want to on UJ. Yeah, that's what I can say. Looking at the 4 hour, obviously this is not a very high probability area of demand. If we would want to go long on UJ, you would definitely need to wait for this low to go before looking for any potential long opportunities. No liquidity in the push up, so I would definitely pass on that. Let's see. We also had silver. Silver is still valid definitely for longs, as yeah, we've been talking about in the past few streams as well, or for the past few weeks/months. You guys know it's still bullish in between this low and this high. I only actually ever look at silver during streams, but we get the push up, we get the retracement down, and now it's in its impulsive phase again. So it's still a very good long all the way up into that blue line over here. Looking at the daily time frame here, again, it's very clear. It retraced into daily order flow here on the sell before the buy. Looking at the 4 hour time frame, it is also a good buy based on the fact that the over order flow has shifted. So anything inside of this green box is obviously a good buying opportunity, with this being your refined 4-hour demand zone for the optimal entry point. So yeah, also looking at that. So yeah, that's pretty much that. Looking at Euro JPY. Euro JPY is as well a hideous pair. Again, it's been consolidating all the way since last summer, but it is trading at a premium pretty much. So again, you can see as soon as we hit the 75% mark, it starts selling off again. So there is still further downside potential for Euro Yen. What else, guys? What else? Looking at Euro GBP and USD Swiss, let's have a quick look at Euro GBP. So Euro GBP also sold off in towards the downside, which we also mentioned in a few live streams. You can see pretty much the risk to reward tool is still on there. Overall immediate order flow is in towards the lows. We had a low break here, and ever since we were traced in towards the highs, we've been selling off again. Overall very clean price action. Very, very nice to see. Again, if you look at this from a mechanical perspective, we had a 4-hour fractal high break here, then we had a low break over here, and then as soon as that low broke, this became a valid supply zone from where you could have looked for a shorting opportunity and could have taken an entry with your stop loss above the highs, targeting a new lower low. So amazing trade overall. I know some of you took your GBP. I got some messages on that, so congratulations if you did. Again, this is the power of kind of like focusing on the higher time frame as well, where we have a key level of support and a key level of resistance. That's at times also just how simple it can be. So for Euro GBP, obviously kind of like the next target would be this area of demand over here. So yeah, still looking for a further downside push from Euro GBP itself. However, we do have budget decisions to be made in the United Kingdom tomorrow. So I would definitely keep an eye on what's going to be happening in the UK tomorrow, as yeah, that's going to be a key decision, which will heavily influence the pound. So I'm not sure if you want to be too overexposed on all of those things. Let me see. So somebody's asking, let me get the right question. So can you explain one more time about how a weaker dollar is causing more profit in America for Apple and Uber? Yeah, so companies or multinationals such as Apple and Uber, they benefit from a weaker dollar due to the fact that they make money on the exchange rate. So what happens is that they sell their service for an X amount of dollars, but then suddenly the euro becomes stronger. That means that they receive more euros in that specific country, and then they make money on that exchange rate, very simply said. I'll send you the article inside Discord, Ben, if you want to read that. It's on Bloomberg. I was looking it up. Let me see if I can open up on my screen. I was reading it actually this week. Yeah, let me get it up on my screen over here. I think you guys can see it. I'm not logged in on this one. Let me change browser real quick. So here you can see at a time when tariffs and trade wars, here we can see it. So a weakening dollar has dropped almost 4% since its January high, providing relief to US companies that do business abroad, and we're expecting a large foreign exchange hit this year. A lower dollar could boost corporate bottom lines, as a weak domestic currency helps increase demand for goods abroad and boosts the dollar value of overseas sales when repatriated. This is a good article. You can look it up. Obviously, yeah, dollar weakness becomes profit boon. I'm not the best in in American English, but for those US multinationals. So this is a good one to read. I would definitely check this out and read more of these kind of articles, because they definitely help you understand, yeah, how to read a little bit more about what can happen, because US multinationals doing business abroad often find their profit inversely tied to the value of the dollar, since a weak domestic currency helps increase demand for goods abroad, as we just read. A weaker dollar Also makes operating less expensive for firms whose international divisions buy commodities priced in dollars. So good read for you there. Let's see. We have Germany's fiscal stimulus and US tariffs, Euro USD uncertainty surrounding April 2nd. Yes, guys, so on April 2nd, we have more news coming out on tariffs. Yeah, we have more news coming out on tariffs on April 2nd. Trump has already mentioned that it is likely that a lot of countries are going to receive an exemption from those tariffs. So this could cause a rally on risk on pairs, being, for example, the Australian dollar, the New Zealand dollar, the Canadian dollar, countries that have been hit hard by those tariffs. So good to keep an eye open for the 2nd of April, as that's definitely going to be moving the markets. I might prepare a presentation as well for that next Tuesday, where we can go over the potential implications and the potential trade opportunities as well that could come forward from that. Euro USD shorts, I do not really advise getting into Euro USD shorts at the moment. We're more looking at the fact that this demand zone is in control for now. This is not a good long in my opinion, definitely not. Why? Because it hasn't swept the liquidity underneath these underlying lows. If we would have swept these lows over here and this low would have kind of been like here, then I would have said, yes, this is a nice longing opportunity. But for now, this is not a nice longing opportunity on euro dollar, but it's also not a nice shorting opportunity because the 4-hour fractal structure is bullish. So I would say stay out of Euro USD. Look for longs if we swipe these lows. And if you're really interested for shorts, then wait for it to come back up higher into the range, for example, in towards here, take out these descending highs, and then look for the 4-hour change of character again. So shorts from up over here, longs from down over here, but this is currently a no trading zone for myself. What differentiates the sweep of liquidity and the fractal structure shift? That's a good question. I've answered it many times before, but what you need to understand is where fractal structure happens, guys. Fractals happen absolutely everywhere within a market. You can see it happens here as well. It's actually what I'm kind of like explaining now, where here you have the fractal structure shift in towards the highs. But does it then mean that I'm going to go long? No, because fractal structure happens everywhere within a market. It's very important to understand that it needs to happen in certain locations. So preferably underneath these two equal lows, that is where you want to see the fractal structure shift happen, because that then to me confirms that there is liquidity or there is demand within the market over here. Here it's just happening at a random spot, kind of like at a support resistance level, but it could just as well just head down lower again. So for me, this is like no need for fractal structure shift. But when you have like the equal lows, then we take out the lows, we liquidate, and then you see the fractal structure shift. That to me is a significant fractal structure shift, which I then take into consideration for a potential trade opportunity. So yeah, that is that. Yeah, AU is looking good for longs, guys. I love it, absolutely love it. Looking for more longs inside of here, looking for more longs. Aussie yen buys, let's have a look. Yeah, so Aussie yen buys also looking good in my opinion. This is a nice level as well. Looking here at the daily, we have daily fractal structure in control, with this being your daily fractal low, this being your daily fractal high. The market retraced into where? Into the 0.5 fib, so the, let's say, equilibrium of the range. It retraced into the sub for the buy candle that we had over here. And from there we pushed up higher, go into the 4-hour, and then what you see on the 4-hour is that we liquidated this low, which is always nice to see a sweep. Then here we had the 4-hour change of character bullish, and then obviously this is the demand zone, and that pushed the market up higher. So yeah, it's still good to look for potential for the upside. Now this is kind of like your 4-hour demand zone, again, should push the market up higher. So yeah, some nice price action on AUD JPY. Why is the market pushing down heavily? It's the New York Open, so yeah, you can just expect some volatility. But doesn't mean that the market is now going to full-blown reverse, but just keep an eye because we are seeing some volatility at the moment. Let's see. Trade of the week recaps, definitely hearts. I'll bring those back for sure. GPAUD USD, GPAUD, dude, make some entries we see. I've already literally talked about AUD/USD and NZD/USD long positions, and Dungu. Yeah. Gold we've discussed as well. Fabio, what pairs do you regularly operate? The major dollar pairs are my main pairs that I trade, guys, as most of you know. That's it for today, guys. No 5-minute trades. Looking at AUD/USD and NZD/USD swings up higher. Those have my main focus for now, and yeah, I'll be monitoring those pairs as my main focus. I want to say a massive thank you to all of you for tuning in again today. Sorry for the mic issues at the beginning. Let me see if I can fix it for the next one. Yeah, thanks a lot, guys. Wish you all a fantastic day and evening, yeah, we'll speak very, very soon, guys. Thank you so much, and yeah, we'll speak soon. Thanks, guys.